NCN.
On NCN for this special broadcast. My name is Shaquan Gill, and I have with me in studio financial analyst Joel Bhagwandin as we discuss a key and important issue that has been permeating the media for quite some time. Mr. Bhagwandin, thank you so much for joining us.
Thank you for having me here, Shaquan.
Now, we've recognized in the media this contention that was raised, first of all, by Mr. Christopher Ram, that the Natural Resources Fund is somehow overstated by more than $270 billion. Is there any truth to that statement?
So thank you for that question and to deal with this issue in a frontally matter. As you would have recognized from the media, I myself, and including the Attorney General, responded to Christopher Ram. And in my response, I described it as a storm in a teacup. And it is a storm in a teacup because for someone of Christopher Ram's stature, who is a seasoned chartered accountant and who has been producing budget analysis, the national budget that is, for more than 2 decades, who appear to be totally oblivious or unfamiliar with the financial laws of the country, it is very disappointing for him to make such a claim. Now, in my response, I described his claim as an aspersion because it is not grounded in any fact. It is not grounded in any proper reasoning or any proper analysis, and he's ignored the fundamental the principal financial laws in relation to this issue. So what is his contention, or his aspersion as I termed it? He is contending that pursuant to the Petroleum Agreement 2016, Article 15 states that the government has to effectively remit to the Commissioner General, the Guyana Revenue Authority, taxes for in accordance with the tax laws, Companies Act, and the tax laws of Guyana, to the GRE, representing the contractor's share of taxes paid. And in so doing, the government has to issue, the GRA has to issue a certificate showing that they have complied with that.
Yeah.
But he's singularly pointed out that particular subsection in the Petroleum Agreement in isolation from the principal subsection of that article, Article 15, which states that the oil companies, the contractor, are exempted from paying any taxes, VAT included, corporate taxes included. So effectively, the oil companies, pursuant to the Petroleum Agreement, they are exempted from paying taxes. And that is because, again, pursuant to the Petroleum Agreement, they pay 2% royalty and a 50% in profit share to the government. That is what the state receives in accordance with the agreement. So he's singularly looking at it from that perspective, ignoring Article 15.1 of the agreement that states it's a tax exemption. So it is a nil effect. He goes on to argue that, notwithstanding that, the taxes that is reflected in the certificate or reflected on the certificate that the contractors receive, in this case ExxonMobil Guyana, that amount of money which is placed in the Natural Resources Fund has to be in the consolidated fund. And that is his main contention, and the manner in which he argued his case gives one the impression that this is a major violation of some law, or the government has committed a major violation of some law or some legislation. But that is not the case. And in my response, I pointed to the Principal Act, which is the Fiscal Management and Accountability Act. The Fiscal Management and Accountability Act, and I will quote verbatim from the Act, which he ignored completely and totally. The Fiscal Management and Accountability Act provides for public monies, what is referred to as public monies, or what is classified as public monies in accordance with the Fiscal Management and Accountability Act. Public monies can be held in one of three places. Firstly, the Consolidated Fund. Secondly, a deposit fund. Thirdly, an extra budgetary fund. Now, let me read the Act verbatim. It says, Section 37 establishes the definition for the classification of public monies. Accordingly, Section 37(1) states that all public monies shall be classified as either A. Received monies, B. Monies in the Consolidated Fund, including any monies in the Contingencies Fund, C. Monies in an extra budgetary fund, D. Drawn monies, or E. Monies in a deposit fund. 37(2) goes on to state that all public monies shall be deemed to be received monies from the time they become public monies until the time that they are credited to the Consolidated Fund, an extra budgetary fund, or a deposit fund. Those are the exact words quoted from the Act, which he ignored. So what is my argument, which is grounded based on my analysis and my understanding and interpretation of the Principal Act, which is the Fiscal Management and Accountability Act? The Natural Resources Fund is essentially an extra budgetary fund. So it doesn't have to be placed in the Consolidated Fund. The Fiscal Management and Accountability Act provides for it to be placed, for monies to be placed in either a fund, deposit fund, a Consolidated Fund, or an extra budgetary fund. The Natural Resources Fund is an extra budgetary fund. Now let me read from the Act what the Act states about an extra budgetary fund. The Act states that Section 39(1) establishes that an extra budgetary fund may be created by an act which legislation shall set out. Now that act is the Natural Resources Fund Act. And it goes on to state A, legislation shall set out A, the officials who will undertake the financial management of the extra budgetary fund, including the responsibilities and accountabilities of the officials charged with the managing of the extra budgetary fund. B, the banking arrangements that pertain to the extra budgetary fund. C, the source or sources of public monies to be credited to the extra budgetary fund. D, the accounting rules and auditing requirements applicable to the extra budgetary fund. And E, the financial reporting requirements applicable to the extra budgetary fund, including the reporting of financial performance, both during and at the end of each fiscal year. One last citation from the Act. 37(4) states that, subject to any other law, resources of an extra budgetary fund may be administered either through its own accounts in selected banks pre-approved by the minister or through the payment and banking services of the Consolidated Fund, but shall be accounted for separate and apart from any other resources. Now let me translate all of that I've just quoted verbatim from the Fiscal Management and Accountability Act to the operations of the Natural Resources Fund. The Natural Resources Fund was established by virtue of the Natural Resources Fund Act. The Natural Resources Fund Act, in institutionalizing and operationalizing the Natural Resources Fund, provides for the governance structure or mechanism. That is, it constitutes a board of directors, it constitutes an investment committee, it constitutes an accountability committee, the responsibility for the operational management of the fund is vested with the Bank of Guyana, which is the central bank, and it comes ultimately under the oversight of the National Assembly. In accordance with the Natural Resources Fund Act, withdrawals from the fund, the Act prescribed the withdrawal rules. So withdrawals from the fund have to firstly be pre-approved through the national budget. Now these are the highest, what I would regard the highest level of accountability and transparency in terms of governance of the fund, operations and management altogether of the fund. Because you can't take a direct charge from the Natural Resource Fund. The consolidated fund, which is governed by the Fiscal Management and Accountability Act, which comes under the scrutiny and oversight of the National Assembly, which means the government cannot withdraw monies from the consolidated fund without the approval of the Parliament, the National Assembly. So the withdrawals from the Natural Resources Fund has to be pre-approved based on the previous year's fiscal balance through the national budget before, and then transferred to the consolidated fund before it can be withdrawn effectively. So the contention that the monies have to be placed on the consolidated fund, the monies are transferred to the consolidated fund, but in accordance with the law, in accordance with two principal acts, the FMA Act, which is the Fiscal Management and Accountability Act, and the Natural Resources Fund Act. So those are the argument upon which, to my mind, I would say to disprove the aspersions of Christopher Ram, because he ignored altogether the Fiscal Management and Accountability Act. And I would say this, that I want to emphasize the disappointment, because I can't understand how is it he ignored the Fiscal Management and Accountability Act to make such an outlandish allegation or aspersion. And it tells me that when I listened to him, he went on a program to further amplify his arguments on one of the radio stations in Guyana. And I listened to him. And the perspective, his perspective, how he interprets this, is from a very basic bookkeeping kind of perspective, bookkeeping, accounting. And I say this because I want to make the point explicitly for the viewers to understand the perspective, which is narrowly focused from a seasoned chartered accountant such as Mr. Ram, versus the operation of this matter, versus how these issues ought to be treated in accordance with the laws, the financial laws. While in financial management and accounting generally, the principles and the fundamentals are the same, whether it's private sector, whether it's public sector, or whether it is on a household level. However, there are differences. There are major differences in terms of the accounting policies and accounting rules. Principles are the same, but policies and rules differ. That applies to the private sector and that applies to public sector accounting and financial management practice. And the difference is this. Let me explain this. Christopher Ram is accustomed to, he's more familiar with private sector accounting practices. And private sector and sole trader type businesses, the accounting practices are not enshrined, and the policies, the rules and policies are not enshrined in the law. They are not backed by a law or a legislation or legislations. Public accounting, however, is governed by laws, accounting rules